Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from the Chicago office. Things are a little bit warmer here. We had that wild little polar vortex. We had schools getting canceled. We had blizzards. We had all sorts of crazy stuff. So it got to like 38 today, and things are sloppy. They're sloppy out there, but I'll take 38 over versus those, 38 degree under wind chills. But as I complain about Chicago weather, we'll have someone that can complain about how cold things get in Texas. And that person is Jake Kingsley, returning to the Grain Feed after a slight hiatus, Jake. And I think it's been a couple months maybe since you were on. You were dearly missed. Of course, we had folks step in and not replace you by any means. Now, but we did have folks step up to the plate, give us reviews of what's happening in the grain and feed, a dairy space. But obviously, very, very wonderful to have you back. So welcome back, Director of Feed Procurement, Mr. Jake Kingsley.
Thank you, Jim. Good morning. It's good to be back. I'm very glad to be here.
And how is the weather in Texas, Jake? Seriously, though, how are things down there?
Pretty chilly down here right now. It's only like 48-ish degrees, so we got you by 10. But starting Sunday, I think we get about a 7 or an 8 day stretch up in the mid 60s. So I'll be taking another sabbatical to work on my tan.
I think, Jake, we were on with a client of ours, and you started to say when the summer begins, and you threw out a month like March. And for those of us that live up north, we were somewhat upset.
Well, by March, the air conditioner will be kicking on down here. So we're 6-8 weeks away from our first taste of summer here.
Very nice. Well, we'll have a lot to talk about then in your part of the world, because at that point, obviously, we will not even be thinking of actually being out there planting up here. But in the coming couple months here, we're going to be talking about planting a lot more, especially as we approach that end of March projected planting report that the USDA provides at the end of that month. So there's going to be a lot to run through the next 2 months, a lot to run through today, especially with your return, Jake. So Paige, if you would kindly timestamp the broadcast, we are recording this on Thursday afternoon. It's usually Thursday morning. We've had to turn the schedules around just a touch, but it's a couple hours later than we usually do it. So it's early afternoon on Thursday. The markets are back in the red a little bit. The screen was green yesterday, and for stuff like the soybeans, they've been green for several days now. So this is kind of a abrupt turnaround from the rally that they've had as of late. It's a big turnaround. These guys are down about 20 cents. March was almost at $12.50 per bushel this morning. We got to $12.47.5. It came all the way back down to $12.15.5. That's March beans. Not very happy with today's export sales report. A little disappointing. I think a reminder for folks that the foreign appetite for U.S. products, unfortunately, still remains lackluster compared to at least the last couple years, on top of maybe what the availability looks like out of South America. I think the market was kind of a wake-up call after that post-WASD sell-off from almost a couple weeks ago, that maybe beans shouldn't run away from $12, at least for the nearby contract. The corn, March has made its way back up to $4.50. We've had a lot of chatter here on the show. I think especially the last time we had, Verl and Jenny on, we were talking about March straying too far from $4.50. A lot of chatter in the marketplace of, shouldn't corn be trading at $4 even, given just how incredibly bearish corn is. And we think maybe down the line there's opportunity for that. But for the time being, March has made its way back up to $4.50. December futures back up to $4.80. And then, of course, soybean meal, stubborn little byproduct. March is back below $3.60 at the moment, but at least up off the lows that we've seen over the last week or so. Again, not running too far from 350, but we're back down at, maybe $3 or $4. I think soybean weakness is helping provide that today. So that's where the markets are trading at the moment. Jake, you're out for a couple months. You've been back on here for a couple weeks, digesting everything that's been happening in the marketplace. You've been like a madman on the phone with all of our feed mills, our farmers, you name it, just all over the country, like a sponge, gathering up just as much information as possible. So let's start with what you're hearing in the corn market, because as we said, that WASDE report just reminded the whole world how bearish we all must be on corn, and so much talk of how managed money is so net short corn. It's just everything out there is bearish, and yet we're not pulling futures down to $4 just yet. We're maintaining 4.5 for now. But what does that do for the physical side of things? Because when we had Verl here, and we've been talking with folks towards the end of 2023, there was this grand vision potentially of the U.S. farmer in the Midwest who's holding on to a lot of corn. Turn that calendar to 24 and say, now's the time. I need that cash flow. I'm going to start unloading this thing. We thought basis would come under all sorts of crazy pressure, and instead the futures market is what has melted down. So what are you seeing corn-wise on the basis front?
Well, you're right. We haven't seen the big meltdown in basis yet, but the farmer did tuck away a good volume of corn into the bins, and they haven't moved a whole lot of it yet. As of what we're hearing from our commercial contacts across the Midwest, our grain risk manager team across the western part of the I-states and the Corn Belt there is a lot of corn still in the bins. I think there's maybe a little bit of cash carryover from the previous couple years of decent yields and decent prices that maybe floats people a little further into 2024 than would be normal for the selling cadence. But we are hearing there's a lot of corn still in the bins. Commercial end users are not getting bought what they normally would at this point in the year, volume-wise. Now, that being said, they're not too anxious about getting product. A lot of folks were able to really load up the bins in the commercial space at harvest at very attractive numbers. And there's just a wide range between the bid that the end user is willing to pay and the ask that the corn farmer is willing to take for their grain, because as you said, futures have really fallen apart in the last month or two here. It seemed like the magic number was probably $5 futures would move a lot of corn, and we've just moved 20-30 cents further away from that. And so now folks are expecting basis to do the work to get that cash price. At some point, the two will have to come together, and I have to believe with the inventories that we do have in the U.S. and the export numbers that we're seeing, like you said earlier, they're not huge export numbers. They're not necessarily totally laid flat and non-existent, but they're not big enough export numbers at this point to really erode the balance sheets to get people terribly anxious about where basis would go. So for the moment, it feels like there's a pretty heavy lid on basis numbers, and maybe over the course of the next couple months, especially if Brazil gets off to a good planting of their safrinha or their double crop corn, which is their primary export product. And then at that point, we're very near to our planting window here and we get into our growing season. If those two things are looking nice, I think especially as you get into the summer months, the April forwards, we won't include March just yet, but the April forward window, I think maybe basis starts to break down a little as you start to see corn come to the market here. And then you have a South American crop really starting to hit its stride, as well as the next crop here in the US teed up to go. We've been hearing that fertilizer applications across the Midwest would indicate we're not going to see a huge shift away from corn acres, even with this big disparity between corn and soybean futures, which typically would indicate a move into soybeans. So far, we don't anticipate a big shift away. So I think we can be patient on the corn front.
Yeah, and there's a lot to unpack there with the corn market, but that your last line right there, we can be patient on the corn front. It's exactly what we've been advising folks to do. I think maybe at most, once we did push futures below 450, we were kind of wedging ourselves into this somewhere between 440 and 450 on March. We said, maybe you can go ahead and, scoop up the rest of your Jan, Feb, March needs. But that's about as far as we've gone, right? We've tried to remain very flexible. As long as the market keeps moving in the same direction, slowly but surely, volatility is going to remain low. So perhaps being able to purchase some upside protection, buying calls at the exchange or whatnot. We're just in a completely different world than where we've been over the last 2 or 3 years on corn, where it had been extremely volatile, prices extremely elevated, extremely choppy. You noted how, the Midwestern farmer, there's a good chance that they still have some cash from where we've been trading the last couple of years. I mean, for a hot minute there, we were looking at cash values in the sevens over the last couple of years. You still had opportunities in the sixes, at least over this past summer. So perhaps that's allowing folks to maybe sit tight. And you noted the fertilizer applications as well. A lot of chatter throughout our grain marketing team here at EverAg. Seems like a lot of guys are still very intent to plant corn. There's plenty of time between now and the actual planting window here in the Midwest. I know not Texas, not as much time, but here in the Midwest, they've got a few months to truly make that final decision, despite some of the applications of the fall. But we know what those applications ultimately suggest. And I think if we look at new crop futures, still hovering around 480, let's say, on that December contract, and November beans hovering below $12, it's still not all that appealing potentially to switch up your game plan on farm and plant beans, at least at this stage. This is a snapshot on January 25th. So keep those things in mind. And like you also said, Jake, we're watching Brazil. We got to see how those guys get that second crop into the ground, which is that big exported corn crop. Things aren't great there. They're not as bad as they were. And so we'll see what happens with their weather systems. How about the protein side, Jake? There's been a lot of chatter on the soybean meal futures market. We finally we seem to have found a new realm under $400 per ton. Why we often call it that stubborn little byproduct is because that nearby contract over the last 3 years has seemed very intent on maintaining a 380 to 390 floor before potentially skyrocketing back up to, we've even seen $500 a ton nearby in the past couple years. So hopefully not as stubborn as we move forward, but still managing to hold 350 or 360 at the moment. What are you seeing basis wise on protein?
Well, I think a very similar tone to corn, in response to the WASDE report, took a lot of the air out of that marketplace. Like you said, we're down here closer to the 350 mark rather than the 400 mark we had been holding on to for a while. Basis has drifted lower in some parts of the country on soybean meal. We had a little bit of a rally back there in October and November on canola and soybean meal, felt like primarily driven by some pretty healthy export movement at the time. And since then, we've drifted back towards what we'll call the lows of the market on the basis front. And then over the last few weeks, kind of perked back up a little bit, not nearly as dramatically as we were there during harvest, but back up, $5, $10, some spots $15 a ton above the very low end of basis numbers, both in canola and soybean meal. I think maybe with as much as we've been preaching patience in the corn market, maybe there's a little more sense of urgency to take some kind of action with protein, particularly canola, just because we are within arm's reach of the bottom end of basis and really the contract lows of futures. At the end of the day, we have taken $80 a ton out of the futures market in the last 60 or 75 days now, and that deserves rewarding the market a little bit there. So that balance sheet, although it did improve with that WASDE report a couple weeks ago now, still relatively lean. We're getting closer to the bottom end of what I'd call the comfort zone on ending stocks, but that could still go away in a hurry and put us back into a similar position of what we've been the last few years. Just a couple of hiccups in South America or planting here. It just doesn't feel like we've checked as many boxes on the protein side to reset that balance sheet as well as we did on the corn front there. So I think in particular canola, most of that stuff's coming out of Canada. I think they produce 90% of the tonnages. And like we said earlier, China had been buying that at a pretty healthy pace. So that one will probably adhere to a more normal cycle of getting through the next 60, 90 days. And as you get into April forward, inventories start to trim up a little bit. And if you're going to feed it, you probably want to go ahead and start owning some basis on that stuff. Because again, we're $10 off the lows. And just as you get into the summer, it becomes difficult to source. Soybean meal, it is a better balance sheet than we've seen in a while. And if we do get some good numbers coming out of Argentina as they really ramp up harvest and start pumping product into the global market here towards probably the end of February, I would expect them to really hit their stride. That could really close the export window for us. And then maybe we do reset the cycle here on soybean meal and proteins. And so you could be a little bit patient there. Again, we're probably waiting on $10 or $15 to the downside in a best case scenario because basis numbers are relatively attractive and futures have really fallen off. So I think you could be a little bit patient, kind of see if we can knock that last little bit out of the cash price. But at the same time, I have a very hard time talking folks out of at least stepping in and buying some amount of cash feed at today's levels, just given the breakdown we have had in the last 2-3 months.
Yeah, I think those are all excellent points, Jake. And you noted we need to get over that hump of the South Americans actually producing this crop. I mean, we are currently all trading the idea that they are going to, the projected forecasts that the Argentines will return to, record production after, kind of getting kicked around over the last couple of years is some of that La Nina drought. So we're anticipating that they are recovering. I think we actually need them to recover officially, see how the globe is able to then turn to them as a protein resource that they have been over the last 10 years or so. And maybe that is the ability to ultimately, put basis back at what have been the lows, bring futures back into a 350 is no longer just the low. It's something we can actually trade through. But I think, Jake, it goes back to, credit to you on when we approach the futures lows and basis lows of this past fall, even further back, August, September, you asked folks to own their protein October through March. And we held it at March in anticipation of that being the key time of maybe the Argentine crop does look good as it's coming out of the field by mid-late March and or early mid-April. So we've kept that time frame open and flexible for folks. Maybe it is best to step in on some canola now, April forward, but hopefully one could envision a scenario where we do get over that hump. And if the Argentines have a big crop, Brazilians have a good sized crop, we actually maybe plant a little bit more beans, just keep on building a little bit of a cushion here at home. Maybe that helps and maybe that kind of does it longer term. Before we wrap up, you want to say anything about cottonseed, Jake? A lot of questions lately, especially we were down in Arizona, a week ago, I believe. A lot of gentlemen feeding cottonseed down there. Any comments on that crop?
Yeah, I'll touch on that and a couple other ingredients here briefly. I think they're worth looking at. Cottonseed really has been a very quiet, illiquid market, really since harvest back in October, November, when they started moving cotton out of the field and running bales through the gins. I think as soon as folks were able to confirm that Texas, Arizona, California had much lower production than they were anticipating early in the crop year, prices spiked up pretty quickly. I mean, we were in the mid to high threes in Texas, and we were immediately up to 4.25 in Arizona, California. A lot of the Midwest jumped up to 350, 375 type of numbers because everybody realized that we're going to have to rail all of this product in from the Southeast, who had a pretty decent crop, but they lost a lot of acres. They just didn't plant them year over year. And so that transportation's expensive. Logistics, as we know, can get complicated when you're going over that long of a distance. And so everybody kind of stepped in and scooped up what they knew they had to feed. And then really the market is feels like it's kind of stopped at this point. We're still sitting at all those numbers, 4.25 out west, high threes in the Texas market and the Midwest in the mid threes. Just there's not much movement in price. There's not much volume trading as far as tons actually going hand to hand. And I expect that's going to be the case for a while, and we'll probably not really see a whole lot of fundamental change in that market until later this October or November as we get a new crop coming in. It's just an ingredient that's hard to totally displace in the ration. We're really pulling it out of one pocket of the country here for this year. And so I think what we'll probably see is maybe if all other commodities really take a beating and drift lower as we get into our planting window. Maybe you see a $20 or $30 a ton break lower. But if all else stays the same, we'll probably see just a slow grind higher in price through the rest of this feed season. And so again, I encourage folks to just step in. If you know you're going to have to feed a certain number of pounds per head per day, own it just to ensure that you've got it. And so that's kind of where we're looking. I don't think it can go back up to the $500-$600 mark that we saw last year without all other commodities really taking off and driving it higher. We also have better forage and fiber inventories in the western half of the U.S. than we had in the last couple of years. That really helps lay it down. Bypass fats are in a much better place. So those things all help keep price suppressed, but I just don't see it getting a whole lot better until we get another crop. And then just briefly, distillers, gluten, some of those other byproduct feeds, they were pretty stagnant. They're relatively firm, I would argue, considering the breakdown in corn price, the breakdown in protein, and all these other feed ingredients. I think it's probably due to some export demand. I would probably sit on the sidelines on those types of things and just continue to buy spot or short-term contracts. See if we can get out of the winter months, bring a lot of these beef cattle and feedlot situations back onto grass, reduce demand a little bit there, see if some of these ethanol plants are able to shake some corn loose from the farmers' hands and start to get a little more free flowing on their product and better basis. And maybe that starts to break down price. So,
okay, understood. Well, we appreciate all those insights. Jake, it is excellent to have you back. The professor is back, everyone. It's always good to have you. I'm not going to get heavy because there's no crying on the grain feed, Jake. But you were sorely missed. You are a good friend, good man, and an amazing partner to all of our dairymen and to other participants in this industry. So thank you. Glad to have you back. We'd also like to thank the Everag Insights crew for their support. Thank you to Paige for her production magic. And speaking of that magic, Paige, I think we hit 1,000 subscribers on the YouTube channel, right? The Everag YouTube channel hit 1,000 subscribers. So everyone out there that's thinking, okay, Jim's mom and maybe the extension of the Matthews family that like is obsessed with Verl, really, the Verl fan club within my family. It's not just them. There's 1,000 subscribers out there to the YouTube channel. If you are not one, join the club because it's a big one now. So get in there and subscribe. There's some great stuff out there, not just the grain feed. There's lots of cool stuff here on that channel. So please tune in. Thank you so much for watching. We will see you next time on the Grain Feed.